We are taking the Biz Talks a notch higher. We will bring you more business moguls.
If there is no difficulty, there is no result.
Brilliant entrepreneurs.
I work a lot with mentors. I have mentors.
Financial advisors.
You buy shares in the SACCO and you're able to earn dividends from the SACCO.
Business development partners.
One of the things that businesses go wrong on social media is they go in trying to sell.
The international community.
All around the world then, there are all these barriers to finance. Not everybody has a bank account. Not everybody has identity.
Arts, music, sports, culture.
We don't need to get back to normal. This is an opportunity to us to relook at our society and how everything is done.
And for the first time, government and various government institutions.
We have brought all the SME in manufacturing.
Yes.
And we advocate on their behalf.
Ladies and gentlemen, Biz Talks Season 2 with MC.
Very warm welcome and karibu sana to Biz Talk Season 2. This is episode 1 and I hope that you closed the year very well, definitely. And it's good to have you. Now, you know, one of the things that everyone wants to know about a new year is, you know, where do you go when it comes to matters investments? Where do you start investing? You know, and we were thinking about it as well and thinking, okay, we need to have this conversation as well and look at someone who can help us get to know where do we invest in 2022. And guess who is in the house? His name is Paul Mwai and he's a big man, I'll tell you that. He says it's not that, but I know from what I read. And he's going to be telling us more because he's well versed in matters investments on what he sees as the best places to run to when it comes to 2022. Now, before then, as usual, at Biz Talks, we always have to serve our guests with a cup of tea and welcome them. Karibu sana, Paul.
Thank you. Asante sana.
It's good to have you. So if you could kindly flip your cap. I know I had asked you to peep on this chest.
Yes.
Now you can tell me, what are you going to have courtesy of Melvin's tea?
Malvin Tangawizi.
I would say,
the old traditional.
You're such a man. Traditional. So please take it up. You can flip it up. Are you going to have it with hot water or with some milk on it?
Some milk.
Some milk, yeah?
Yes.
Excellent. So, you know, this is a very interesting year. And a lot of people would really want to know where do they where do they invest their cash so that at least they can have good returns. And I'm sure people are looking forward to this conversation as well. You know, when I threw up the poster, I had a lot of people saying, you know, I can't wait for this conversation.
Okay.
Do you take it with sugar or you're good?
I'm good.
Oh, you're good?
Yes.
Yeah. Is this a new goal for the year?
No, I think, you know, as you get older, you reduce your sugar intake.
So that's like a fact for many people.
I think yes, it is.
Okay, great. It's good to have you here.
Yes.
And we are really looking forward to just really conversing on this matter.
Okay.
We're going to have hibiscus because you know, this one requires nothing.
Yes.
And no sugar, no nothing. It's just tasty. I'll just have to go and try at home.
Okay. I need to be a little more adventurous than
You need to be, yeah.
Something out of the traditional.
Wow. So many thanks once again for coming through, and we are really looking forward to this, you know, just conversation. One of the things that I have seen and observed is that people, yes, think about the future, think about their money, but most times they don't know where to start from or jump to. But before we get into that, let me just give a shout out to anybody who's watching us on Facebook. Let me know that you're watching and where you're watching us from. It would be very nice to really have you around. And then it would be also nice to know where are you and where are you watching us from, you know. Ni kutuma salamu, is it? So Paul Mwai, karibu sana. And maybe I would just want to start. You know, I did introduce you big time, but please, if you could tell the viewers who Paul is.
Oh, wow. Okay. So Paul is I'm an investment professional.
Yeah.
I've been doing investments advisory or investments in the investment world for the last 30 years in the Kenyan market.
Yeah, 30 years.
30 years.
Quite some time.
So I'm also a husband, a lovely wife. I have three well, what can I say?
Amazing kids.
Amazing teenage to young adults. Kids. I'm a Rotarian, so currently I'm serving as a district fundraising chair for the Rotary Foundation in Kenya, which is almost a second job. And on my part time, I like exercising.
Wow.
I like I play golf occasionally when I can, when I get the time. And yes, and I like meeting people and socializing.
We'll talk more about golf because the number of people I've had who play golf, I think I better start now. So, before we get into the subject of the day, 30 years in this matters investment, that's quite a vast amount of investment in terms of knowledge. But just walk us through a little bit on your career journey. Is it something that you always wanted to do, and how did you jump into this, and how has it been?
Yes, I think I was very clear. This is exactly what I wanted to do.
Wow.
I grew up in Nakuru. Went to Moi Primary School in Nakuru. Shout out to the class of 79. I went to Kabarak, and then I went to Menengai. And somewhere along the way, I studied commerce, and I really liked it. I enjoyed it, and I thought, reading about all this stuff was really exciting. And I said, this is what I really wanted to do. So I went to university in Australia, and they had an applied economic degree, which had two options of industrial economics or banking and finance. And I chose the banking and finance option because I could relate more to that. And at that point, I remember that a lot of it had a very big bias towards investment banking. I remember making a trip to the Brisbane Stock Exchange in 1987. Sorry, I think not 87. Not 87. 89. The years have gone. So so I was clear that the investment world was always what I wanted to do. So when I came back to Kenya, I tarmacked for 1.5 years. In those days, you got your CV and your papers and the folder
and a nice envelope.
And you walked and you knocked on doors. And you had to deal with the watchman, the receptionist, and the secretary. And eventually, if you got to the boss, you got to make your pitch. So 1.5 years was looking for a job, which was a pretty tough time in my life. But eventually, I got a job with Barclays as a management trainee, which is now ABSA, which was quite excited. My first day was at Haile Selassie Avenue branch at the back office. Those days, a back office was actually a back office. It was actually in the back room, and when they did the transactions, we keyed in the vouchers at the back. So I did 10 years in Barclays. It was quite exciting, but I immediately moved in towards the investment side at Barclays Trust Investment Services and Barclays Merchant Finance. And then on Barclays Trust, which is where I ended up, was sold to Old Mutual. So I moved to Old Mutual again, doing investment advisory for pension schemes, managing quite a number of pension schemes. And then after that, African Alliance came calling, and I moved to African Alliance to head their asset management side. It was my first position as CEO, quite exciting. And then after 4 years, I then joined AIB, which is where I still am. I'm now 10 years in AIB, so I'm a sticker. I stay. It's good to see that I go the distance. You go the distance, right? It's good to see that you're. But it's quite an exciting journey through this investment. Yes,
it's quite something.
Yes.
Besides that, I also know that you work with the NSE somehow and you represent that. I know you just left a bit of a few things here and there.
Yes, so I am the vice chairman of the stock exchange.
Yeah.
I joined the stock exchange as a director about 5 years ago.
Yeah.
Following my election as chairman of CASIB, the NSE felt that I could represent the stockbroking community on the stock exchange.
Okay.
And then so I joined, and I think last year I was honored to be chosen to deputize Kipono Kitoni as the vice chair of the Nairobi Securities Exchange, which is indeed is an honor and a privilege for me to serve at that position.
Lovely. Let me just give a shout out to Eliud Kogi and Kevin Mushira, as well as Mukonyi Wasimbuku. This is Mukonyi Melchizedek from Kapsabet. Thank you so much for your watching. Where are you watching us from? It's important. This is an important conversation. Investment opportunities in 2022. Let's get now into the subject. And I am sure people now can tell we have the right man in the house. So I'm just going to throw this from just what I'm thinking about, and I'll ask viewers to help me as well with asking a lot of the questions that will be there. My first question that I put down was, where should one invest their money to just get good returns in this country? You know, because there's a lot of things that happen. You know, people will talk about this, that. Where is the sure way? 3 or 30 years that you have seen, you can tell there'll be a good return here.
There'll be a good return. I think so. There are many opportunities for investment. One of the areas that I think the stock market is quite the obvious place.
Yeah,
it's an opportunity for you to invest in companies that are growing and have good opportunity. And I think the thing about the stock market sometimes, and not just the stock market, I think investment sometimes go in fads. So I think there was a time when property or buying plots was the in thing. Now there's the realization that maybe perhaps just buying a plot, it might be liquid, it might not be able to sell it when you want to. But people did make a lot of money out of that. So that created that season. And the stock market also had its season in the mid 2000s. I think from 2009, these people. I mean, in 2002, the market went up about 200%.
Wow!
So you can imagine 2003. So you didn't even have to think of which share you are buying. So long as you're in the market, you made money. And those things will come back. They are all cycles. And I believe that the stock market particularly is due for a similar kind of cycle. What supports that, particularly this year, is one, we are seeing a change in the economic growth patterns of this country. Partly because of the post-COVID recovery. And we've had 3 consecutive quarters of above 8% growth. That's something we've never seen. So that means that the economy is really steaming ahead beyond perhaps most people's expectation. And there is an optimism that if we maintain that momentum, that should represent very good. Perhaps it's also got to do with over the last 20 years we've invested a lot in infrastructure, and maybe this is when the payback for that infrastructure investment is coming through. So we are beginning to see the economy now begin to steam forward. And I think that creates a lot of optimism. That would favor the stock market. The other place is the bond market. I think that also creates an opportunity. So as we're going into an election year, and currently the government is borrowing significantly from the domestic market. We also have the currency depreciating. There's a likelihood that this year we will see interest rates on bonds rise, and I think we're already beginning to rise. And I think bonds are long-term investments. You want to catch them when the rates are at the highest. So if, for example, you buy a 20-year bond at 15%, you're guaranteed of that 15% for the next 20 years. There might be ups and downs in the subsequent bonds, but you fixed yours at that 15%. So this year I think presents a really good opportunity for someone to lock in some very good bond yields. Because I think we are in that cycle of the bond market rising, and and I think towards mid of this year, we will begin perhaps, I expect to see a peak in terms of the bond interest rate yields. And I think other opportunities, I think the property market is still not whatever, I think it still has opportunity. The only difference with the property market is that it tends to be, the cycles tend to be longer and slower moving. So while the stock market might have a 3 or 4 year cycle, the property market, when it comes down, stays down for a while before it begins to pick up. And when it goes up, it stays up for a while. Like we've been having, a boom for a while, but we forget that in the 2000s, the property market was also depressed. So, the thing is to understand that everything is cyclical, not just investments, and that you need to take advantage of those cyclical movements to get in at the right opportunity. And I think for now, the stock market and the bond market present an interesting cyclical opportunity for people to get invested. Yes.
I was looking at how the markets were performing last year. And investors who bought like shares of equity by the end of the year were really happy. They made more money. I think it was one of the best performing stock amongst the many others that were there. And I think this is just a call to guys. We want to just get into the conversation and see what is there, what is all these shares about, and all those kind of things. And I know there could be very many questions you could ask. Maybe they might end up asking you today, but you never know. So, but when you go back to that conversation you've spoken, how the economy has been growing and all that. And there's been a lot of critics as well who have been criticizing how our economy is doing. I don't know why. Yes, we're seeing the growth and the percentage, and you're saying this is a precedence for good fortunes ahead. But people are saying, the country is so much in debt and all those kind of things. Even thinking about my personal investments, should I be worried about if the country is in debt or what? What's your comment on that?
Yes, you're quite right. If the company goes into debt, what are the likely implications of, and I think we've seen countries that, have got into a debt crisis. So Greece, we saw Portugal, we saw Spain. So the likely implications for that is depreciating currency, rising domestic interest rates. So you lose value if you invest in Kenya shillings, then you're losing value. There's a possibility of getting capital flight out of the country in terms of the investors moving their money out of Kenya into other countries. So those are the dangers. But let me say that yes, we are at a critical point, but I don't think we are in that level of crisis yet. Clearly, the government needs to manage their debt a lot more because debt tends to spiral. Once you get into that spiral, then it just downhill all the way. We are not yet at that point where it begins to spiral down. And I think we are seeing government already begin to change their financing model for infrastructure to using their private partnerships, where rather than committing to debt to finance infrastructure, they're using different methods of financing. And I think without necessarily spending too much on the debt. So yes, it could have huge implications, but we are not yet down. We have not yet gone down that route. And we hope that the government will manage it, manage us out of what we are in right now, using some prudent financial management.
One of the things that worries people when it comes to now investing is a year like this one, where we're about to get into elections, and people would say, hey, you're better off holding back and watch and wait. And so, but people still need to make some money, so there's a bit of
I think they say that the Chinese say the crisis and opportunity are one and the same thing. And I think someone said, don't never let a good crisis go to waste. I think, the uncertainty creates opportunity. If you look at history and you look at perhaps the time when we got interest rate caps coming to the market, the price of KCB fell to 25 shillings. Wow, because everyone was selling. Everybody was selling. Everyone was selling. Now, those who are smart enough to buy then, they bought. When COVID hit in March of 2020, the price of Safaricom went down to 24 shillings. Again, the idea of panic selling. So I think it is important to understand that those declines in the market actually create an opportunity for you to get into the market at very good prices. So long as you are investing in shares with strong fundamentals. And also, if you're already invested, it also gives you a very good opportunity to cost pound average, so reduce your average cost of your investment. So sometimes they say, you make money when there is blood on the streets, when they are panicking and they are whatever. So I think that if you have some savings, you need to look at the opportunities over these next few months as an opportunity to build your portfolio at perhaps favorable prices. I know the election is always, people get nervous, but I'm confident that we will get out of it. There's no guarantee that we will not get into some trouble in it. But I think at the end of the day, I think we'll get out of it, and the decline will present an incredible opportunity for investors to buy good stocks at good prices. And I already mentioned the opportunity as well in the bond market. As rates go up, also that creates an opportunity for you to lock in very good bond yields. All
right, thank you so much, guys, for your comments. I think Shira and Moshira Kihi, I think you're saying there's a bit of a distortion, but I think technical team, just check it out. I'm seeing, but thank you so much. But we have you all here. Thank you so much for your patience. We love the conversation. Somebody saying it's a very nice, candid conversation though, so they're listening in. So if technical team, you could actually quickly check out on something, let me know if we need to do a break or something. I will be ready to jump into that, but I think it's fine. So far, so good. But if you can hear me at least and you can hear something, let's keep on. That's why you're still there, so we keep on the conversation. We just been talking about investment opportunities in 2022, and we're just looking at this year and saying, wow, it could be a year where people shy away, but August in house says, what, where there is people running away, sometimes there could be an opportunity of living there. And I like the examples that you've given, and just giving a shout out to some of the people who are watching us. And by the way, please always keep me company by telling me where you're watching from. Let me throw this question out. A lot of people do not, first of all, save. In fact, there was research done about Kenyans and savings, because we're talking about what to do, with the money, investment opportunities. But some people don't even have something to start with, And a lot of people complain and say, what, we barely make ends meet. Paul, I want to throw this question to you. What do you say to someone who's watching and they feel like, I don't have enough to start saving? And I'm sure you've come across such people.
So I think the misconception that people make is that investment is a function of savings is a function of how much money you have. I'd like to put I made this book called The Atomic Habits. Yes, it's a good read. It's a very good read. Yes. So savings is a habit. Not it's a habit that you develop. Develop a habit of saving. It's not a thing that you do because you have extra money. It's not something that you will do one day, one time. So it's just the proportion of money. So even if you have 100 shillings and you're doing 10 shillings a day, you're doing something. It's a habit that you have developed. And the best way to develop that habit is to commit yourself to a monthly commitment. Then you develop the habit of saving right from an early age. So that misconception that it's something I will do one day when I make the money, that's where we go. In your life as possible, and that's what we need perhaps to cultivate in the younger generation of Kenyans. And that I know people who have very high salaries, but they save nothing.
Yeah.
I know people who have very little that they earn, but they save close to 20 to 30% of their salaries. So it's really
With
not
even the
a
little that
factor.
they earn. Yeah.
Even the little that they earn, they have developed that habit of saving. So I think that's what we really need to think about.
Awesome. And I love the questions that you guys are sending. Philip Mwangi, I've gotten your questions. I think he's talking about retirement benefits and all that. We're going to get there. Mona Magina as well, you're watching us. Thank you so much for those. So we're going to be checking out on this questions later on. But first of all, let me have my bunch of questions answered. There are quite a number, but I feel actually we might not get there. So let me ask another one. So in a season of crisis, people get tempted to leave their cash in places that they consider safe. Because that's what you don't want to lose the money. And crisis may not always be like we always sometimes predict, or elections or something. It could just be whatever crisis. You want to know that you can lose a job, but the savings that you have are in a place that is safe. From where you sit, with all this investment portfolio that you have given us, from the real estates to the markets and all that, what would you consider and advise as this is a sure bet?
What is a sure bet in this environment?
Yes, of saving your money.
Of saving your money?
Yeah, so that you don't lose it. Investing. Let's use the word investing. It's better that way. Yes. Because you just don't want to save. You want to make some money out of the money.
Okay.
Yeah.
All right. So every investment has a risk profile. They are low risk investments.
Yeah.
So if you start, for example, with the treasury bills being the lowest risk investment, and that's normally what we call the risk-free rate.
Yeah.
Then you go to treasury bonds, which increase their risk because of the length of which you have committed out your money.
Yeah.
So you go up one risk earlier, higher.
Yeah.
Then you go to the stock market. The stock market also represents higher risk than bonds.
Yeah.
Because there is uncertainty with regard to the expected cash flow. You see, with a bond, the coupon is known. You say it's determined from the beginning. With investing in the stock market, the dividend is an unknown.
Yeah.
And indeed, people need to predict that, and it could go up and down. So that represents also a higher risk. So if you really want to stay safe, then the bond and the treasury bills perhaps present the best opportunity in terms of risk and return. We also have a unique situation in Kenya in that we have bonds that are yielding almost 6% above inflation. That is an abnormality. Normally, bonds, the gap between inflation and bond yields shouldn't be that high. I think that's a factor of the heavy government borrowing in the domestic market. And I think there is probably an opportunity for government to rethink as to whether they are pushing those rates too high by excessively borrowing in whatever, which also then affects other interest rates. So where you want to stay safe, that's where you have to. That's where you probably need to look at.
You're right.
But at the same time, perhaps the better thing to do is put it in short-term, high yielding, like money market funds. And be ready for the opportunity. Be ready for the turnaround. Because you will go for a crisis and will come out. If you lock it in too long, then you'll miss out the opportunity to take advantage of the turnaround.
Okay, fair enough. And I believe that answers some questions here. Thank you so much, Mishiri. She's saying our sound is so clear now. Thank you. Some people are very patient, and thank you so much for that. Najma South B following. Najma is one of our top fans, always tuning in. Thank you so much for that. So I have one more couple of questions before I allow people now to throw in the questions. And whatever you have questions about investing this year, please feel free to throw them my way. So let's talk about mistakes people make when it comes to choosing an investment opportunity, and you hope, because you have seen a lot of them, 30 years, I keep saying 30 years, I lift up my hands, You have seen people make money, you have seen people lose money. So let's talk about the losing part of it, because nobody wants to lose money. What are some of these mistakes that you tell people, in 2022, you better be careful when it comes to this and that and that and that? I'm so interested to hear this.
So one of the common mistakes that most people make is to panic.
Panicking.
And maybe sell into a falling market. Because actually sometimes the people who make money need to be contrarian, and I think majority of people think, oh, the price is going down,
Yeah.
I need to sell.
Yeah.
Other people think the price is going down, I need to buy.
Yeah.
When the price is going down is when you really need one. So one of the most common mistake
Yeah.
is that as you lose money, as you lose money, you panic and you begin to sell. I think if you have invested in shares that have strong fundamentals,
Yeah.
you need to be prepared to keep the distance. And also now what happens, another factor is people don't have the right time frame for the investment.
Okay.
So, for example, your kids are going to school
Yeah.
in 6 months' time, and you say, I'm going to take their school fees and I'm going to play the stock market for a while.
Yeah.
Because Paul Moy said that equity bank shares are going to go up.
Yes.
I'm going to play.
So you want to run in there.
And I'll make a little extra money.
Yes.
I'll be able to pay school fees and have something
Yeah.
left.
Yeah.
I think that's one of the most common mistakes.
Yeah.
You need to, the stock market is a 3 to 5 year commitment. So if you're going there, you better be prepared to,
Very
to
true.
do whatever. Make your fundamental analysis.
Yeah.
Look for good quality shares.
Yeah.
And look for long-term investment, rather than and also the other big mistake.
Yeah.
Is to think that there is quick cash that you can make. I think there is no quick cash.
Yeah.
It takes some hard work, and you have to invest time as well as money.
Okay.
So be prepared to commit time to investment.
Yeah.
To be able to make money. Yes.
I'm tempted to ask this question about red flags, because we have found people duped, and I think I don't want to mention names. I've seen people ranting on social media, some certain company promised this, they're not doing it, all those kind of things. And you'd wonder, if I'm considering to invest, what are these things that if I see I should pause first before pushing my money in there? What are some of these red flags I should be careful about?
Okay, so I think corporate governance is a very important aspect of that.
Governance, yes.
Yeah, look at the composition of the board of that company. Do they have boards that are reputable people who have...
So like the organization structure, do they have a board? Yeah?
Of the board.
Okay.
Are they people who have an understanding
yes.
of investments? Because some people you would get people with very good credentials,
yeah,
but don't necessarily have the knowledge to understand investments in that way.
Yeah.
And so that's one of the red flags.
Yeah.
You need to look for people who have a very deep understanding of investments.
Yeah.
Who are sitting on the board and supervising, and that company has good corporate governance.
Yeah.
Corporate governance structure.
Yeah.
The other red flag is if it looks too good to be true, it probably is.
Nice percentages, 20%, whatever.
So if everyone is paying you 10%,
yeah,
and somebody is paying you so much higher than the rest of the market, I think that is a red flag.
Yeah.
I'm not saying it's not possible. I'm just saying you need to interrogate where the extra return is coming from.
Due diligence, yeah.
Do your due diligence.
Yeah.
If it looks too good to be true, it probably is too good to be true.
Be careful, don't just jump in. Hey. Okay. Well, I know I like asking these questions at the end of the conversation, but I think some of them are flowing with the conversation, especially our dear Mushiri Kihu, who was really checking us up to ensure that she gets everything clear. One of the quick questions she has asked, I think, in the conversation is, where exactly can we access applying for these bonds and treasury bills?
Okay, so treasury bills are at the Central Bank of Kenya.
Yeah.
You can open a central depository account at the Central Bank of Kenya.
Yeah.
And then you can talk to your stockbroker to facilitate the investment.
Yeah.
Or you can talk to your bank or your stockbroker as well to facilitate that account opening.
You're right.
So the issue, so that is the simple process. You need to fill in a form, you need to provide your ID, you need to get that form stamped by your bank, then take it back to Central Bank and the witness, and once you have the account ready, then you no longer need to go back to Central Bank. After that, the process is all automated.
It's automated.
You put in your bids. I think they have bids every month for bonds, I think every week for T-bills. I think it's every Thursday. And you're able to put in your bids and make the payment electronically, and then your interest comes automatically to your bank account. And the maturity also comes automatically to your bank account.
Awesome.
So the only pain point I could say is the process of opening that account on the first step. But after that, it's a very smooth and easy process. And just reach out to your stockbroker or your bank, and they would advise. Yes.
There you have it, Mushiri, and I think that's a very good question. We shall be having more conversations, especially about just wholly just investing on bonds, because I think Paul can witness this. It's a nice conversation to have that can take some time. This is just a brief way of doing that. The other time we had such a conversation, I didn't know people can walk into Central Bank. We always see serious people there with their guns, and you're thinking this is not a place to.
It is a bit intimidating.
It is,
and there's nobody outside on the street.
And there's nobody. And in fact, if you look like you're just walking around there, you might be asked, "What are you doing?" Kumbe people walking.
Yes.
Anyway, so we shall have a more detailed conversation on that. Wow. I can see a question on crypto, which is one I had prepared you on, and let me see whether it was my next question for you. Actually, no. It was actually the last question before this one. So, what do you consider investing with purpose to be? It is somebody who just sent me that, and I said, that's a good one.
Yes, that's a good question. So, investing with purpose is that people say, why am I investing? What is the purpose? What is the end goal of my investment? Am I saving so that I be able to pay for my children's college education? Am I saving for retirement? Am I saving for my next holiday? You can also save for that. Or am I saving to buy a house? So the purpose of your saving and investment is to be able to achieve a certain goal. Because other than that, just investing to get rich. Is then just investing without purpose. So the purpose or the end game, so to say, of why you are investing is what is absolutely critical. And
there must be a reason.
It's important to have the why. The why of saving and investment. So in many cases, it should be, what am I looking to achieve with this money, and what's the end goal? Not just to have a big bank balance. It needs to have a purpose and a goal inside. That way you remain focused. And then you don't go, the probability of making mistakes such as the panic selling then become less, because you're saying, no, I have an end goal, and I'm still got time to achieve what I'm set out to achieve.
I want to create a practical scenario with you. Because I want you to advise me and many others who could be watching. Let's assume a figure, 50,000 shillings is what I earn. And because I've been told it's important to save your 10%, they are very nice formulas that I've heard about, So I have my 5K every month. In fact, this is end Jan, and I have my 5K. And now I'm listening to Paul Mwai. And of course, my 5K is ready to get invested now, so I can make something at the end of it all. Maybe it's going to be the purpose. Maybe it's a holiday plan. I want to have one of the best times in Dubai, What would you tell this person who is having this goal? I'm gonna save for a whole year. So that means it's 5. That's about 60,000 shillings by the end of the year. And they're looking that maybe this 60 will not be 60. There could be something at the end of the year. I don't know whether that's long enough, or they need to be more patient. But what could be just going a bit practical?
So assuming I want to save for a holiday in Dubai in 1 year's time, with that 5K, I would probably say, look at a money market fund. It gives you low risk because of the diversification that they do between various investments, as opposed to going directly to one issuer, like the bank. So you have a money market fund, and also gives you quite high returns. I think we are looking at about 8 to 10%. then you're able to accumulate and compound that interest on a monthly basis.
Yeah.
And then so by the end of 1 year, you'll then have achieved the 60,000 plus interest.
Yeah.
And that will be able to finance your whatever.
Okay.
Because the horizon is short, you don't really want to start playing the stock market and other kind of things like that.
Yeah.
If your objective then is to save for your children's education, then you need to look longer term. And now that's when things like the stock market comes in.
Yeah.
Look to build a portfolio of well-researched, good fundamental stocks, and be prepared to hang in there on the long term.
Yeah.
Make sure you monitor, of course, that some shares go bad along the way, and you need to be able to monitor and know whether to sell or to retain.
Yeah.
But if so long as the fundamentals are right, you need to continue investing and build it up.
Okay.
Now this needs to be a longer term horizon.
Yeah.
And you then need to look at that horizon.
Okay.
Now, if you have retired, for example, and you've gotten a lump sum,
good cash.
Yes.
Yeah.
Now, when you retire, that means your revenue, your income, your regular salary is no longer coming in. So you need your assets to work for you.
Yeah.
So, for example, that's when perhaps a bond would be an ideal investment. And you would perhaps now take that lump sum and invest it in a bond.
Yeah.
Say you take, say you got a lump sum of 5 million shillings as your retirement package, or 10 million shillings for simpler calculation. You put it into a treasury bond at say 13%.
13%.
You are earning at least 100,000.
Just coming in.
It comes every 6 months.
Every 6 months.
But equivalent of about 100,000 a month.
Yeah. Very nice.
You see, you have generated some income that gives you a level of safety. Yeah. That you will not even sleep. You will not sleep hungry in the event that things don't work out the best way you can.
Okay.
So it all depends on your purpose.
Okay.
And so that's why it's important to consider. What is your purpose? What's your end game? What's your objective? Okay. So if also when we go back to children's education, if, for example, you want to invest for your children's education and you want them to go to invest to study abroad, then you need to think of investing in offshore or in currency denominated whatever, so that you hedge the risk that, by the time your child gets to university, the Kenyan shilling could be something at 130 to the dollar, and your school fees is so much more than what it would have been. So you those are the things that you really need to consider when looking at what's the ideal investment.
Anytime you mention something, a question pops up. I'm going to ask you this. What's your thought about $1 billion? No, not $1 billion. My goodness, I'm thinking about dollar billions, right? A dollar account.
Yes.
What's your thought about that? Is it good to have one? If you can afford to do it?
It is good to have one.
Yeah.
If you have dollar commitments and you have dollar revenue, then it's good to have a dollar account.
Yeah.
But if you are paying things in Kenya shillings and you are receiving money in Kenya shillings, then I think there is no real purpose to having a dollar account. Yeah. But if you have commitments in dollars, so if you're an importer, and you are importing things from and you need to be paying in dollars, or if you are exporter and you're receiving money in dollars, then there is a justification to have a dollar account.
Okay.
Yes.
Okay. Lovely. So let's get to a question here. Oh, Maya had said we're going to talk about the crypto. Please, let me throw it to you.
All right.
In fact, somebody has asked it. Let me ask it from the viewer's perspective. This is Mushire Kihu. And is Kenya considering having its own cryptocurrency, or where are we as Kenya as we bridge with the future? But before you even look at that question, I would want first of all to hear your perspective. Okay. It looks like it's a big wave coming in. What's your comment on it?
Okay. So cryptocurrency is a very excellent innovation. As far as the blockchain technology, it is an excellent innovation that I think will be with us for the foreseeable future. I think I saw the other day that India is it India or something that's issuing its first digital currency or something. So governments will probably begin to adapt this technology to whatever. Now, Cryptocurrency is bitcoins. If you take the various bitcoins and stuff like that, as an example, they fulfill most of the functions of money in as far as what we learn from the economics books, apart from one, which is very critical, the store value. It becomes a very poor store of value because it fluctuates too much. You know, you can't, you know, if I have the Kenya shilling, I know that the Kenya shilling is at 114 or 115 to the dollar. It's very unlikely that tomorrow it'll be very different from that. Slight differences, but not very true. So that's a very important currency of money that Bitcoin doesn't necessarily have, and that makes it what I would refer to as a very high risk investment. So what a high risk investment means, there is an opportunity to make a lot of money. There is equally an equal opportunity to lose a lot of money. The other concern that I have with Bitcoin is that you know, one of my best subjects in school was history. So I am always a student of history, and I need to learn from what history has taught us. History has taught us that once we bring these things and they are unregulated, greed soon takes over. And things begin to fall apart, and then the regulation comes in to manage that. So I have a feeling that Bitcoin will go through a similar cycle where we have unregulated trading and investing and whatever, and regulation will eventually come in and stabilize that market. And that might mean that that process of switching from unregulated to regulated will be as a result of a significant pain coming from what's going to happen from an unregulated market. Those are my views. Again, we are in uncharted waters.
That's true.
It's not been tried before, and it's but as I said, it's an exciting new innovation. And I think the concept of blockchain technology will be with us and will be used for many other things, including bond issues, including maybe even our Kenyan government deciding that it's no longer going to print currency, it's going to use that technology to issue the Kenya shilling or other central banks adapting that technology. So the future of that is there, but whenever you see that level of volatility, it's high risk, high return. So you need to be prepared for a rough ride.
Philip Mwangi, sorry, please remind me after how long the bills bonds mature. I think these are different. I think I already have an answer to that. There could be a 10-year one. Could even be a 5-year one, right?
So the bills are 3, 6, and 1 year, up to 364 days. So anything below 1 year is normally referred to as a bill. Above 1 year is normally referred to as a bond. So they go up to 30 years. And you know, they're different tenors.
It's time now for your questions. So send them in. I'm reading them out. Let me see another question that was asked here. Where is it? I had seen it. This is good conversation. Please advise how to invest with my retirement benefits. How much on minimum can I start with? So I don't know whether this is a guy who's gotten some good sum of money or what. So you got the question? How much advice how to invest with my retirement benefits? And how much on minimum can I start with?
So there are a few options that you have with your retirement benefits, particularly if you have received, I'm assuming he's received a lump sum.
Let's make an assumption. Let's make an assumption. He got some 10 million or something.
That he's retired and his employer has cut him a check of 10 million shillings. And he's wondering what to do with it. So one of the options you have is to buy an annuity. Now, an annuity is perhaps the opposite of a life policy if you flip it to the other side. So you pay the lump sum. You see, with the life cover, you pay premiums, then you get a lump sum. With an annuity, you pay a lump sum, then you get
just the
regular payments
coming through.
And on top of that, they say that in the event of your death, the annuity then perhaps takes the bet
Yeah.
that the annuity provider takes the bet on how long you're going to live.
Yeah.
Yeah.
Oh, that's what it does.
It does. It's a bit morbid, but that's the truth.
That's the truth.
That's the truth.
Hard truth to
Because
swallow.
if they have committed, for example, to pay you a regular payment of 100,000 a month for the rest of your life, and you only live for 5 years, the balance is theirs. So they're actually taking a bet that what it does is that it secures that so long as it secures you.
If maybe that's the salary you used to earn, you continuously have it.
You know that you have it. And there are also various options, that you can have one for you and your wife, so that if you die, then your wife gains the benefit.
So those options actually are here in this country?
Those options are here. They are issued by insurance companies. You pay the lump sum, and you get your regular annuity.
And when you die, don't ask a question.
But I said it's not that bad, because sometimes they give you a guaranteed period of 5 years or something like that.
Okay.
And they also use actuarial tables and say what's the life expectancy. So they do their calculations and see what, on average, out of this pool of people that I have given annuities, a certain percentage will die at these different ages.
Yeah, you're right.
And therefore, this product is profitable to me. So it's a bit of it's a mix of an insurance product. So that's one of the options that you could do. The other option, I already touched on this, is the bond. Just go put in the bond. Again, what they say is that when you're retired, you don't have those many options to take risks. So you don't want to start risking your money.
You're right.
Because you don't
opening a shop, then it goes down with all your money.
Your second chances are reduced.
Very true.
So the chances of if you're young and you lose all your money,
you have room to try something else.
To try something else, to start a new business, to whatever. But as you get older, then you need to just secure. And also then, it's also difficult to get another job. So if you've gotten your retirement and you've blown it, then it is whatever. So the key thing, those are the two items. I think also property presents a good opportunity for investment, whatever. If you can buy a flat that or a rental property, that also presents good avenue to invest your retirement. What's the key thing here is that because you're retired, you want regular income. If indeed you want to go to the stock market, then you're looking for high yielding, high dividend paying stocks that will give you now that regular income flow. Yes.
Wow. That's true, by the way. The older you become, the more you shouldn't try things out here and there. You might lose your money.
No, I'm not saying don't try it, but just be sure that if you try, instead of trying it with everything, which is what you can do when you're young, try it with a smaller portion of your total nest egg.
Okay.
Yes.
So someone is asking, is a savings account worth it in a bank?
Yes, I think so. A savings account is perhaps the original traditional investment that we are all used to. And that's perhaps where we all started. What I would say is that always do comparisons. If I put my money in a savings account in a bank, what's my next option? So for example, you could look at a money market fund. Does it pay higher than the savings account? And is it more secure? And does it provide me better liquidity? So if you look at, for example, money market funds have a distinct advantage of a savings account. A savings account only allows you maybe to withdraw once a month. I think many of them are like that. Some might be different.
Very true.
A money market fund will allow you to draw your money anytime. So it's a question of looking at the characteristics of whatever you put in your money. What you're looking for, one is liquidity, higher yield, and the risk return profile.
I think those are actually very good parameters to look at.
Exactly.
Okay, that's a good question. There's another one here. Can our guests genuinely advise, are insurance policies good investments, or are they a fluke? In fact, they have put an answer there, yes or no.
Insurance policies I think there is a really big misunderstanding of insurance policies in Kenya, and I think partly because they haven't been sold correctly. And I think the insurance industry needs to really think about that. So, for example, you take an endowment policy, which says you pay me 10,000 a month for 30 years, and at the end of 30 years, so there's two aspects to that policy. At the end of 30 years, they'll give you a lump sum. Maybe they tell you at the end of 30 years, we'll give you 20 million shillings. But throughout this period, we'll also insure your life, so that in the event of your death, we'll pay you X amount of money. So what happens is that people get that misunderstanding that you're actually mixing two. There's a component of that that's going to life insurance, and there's a component of that that's going to investment. So you get to the end of the 30 years, and you are asking yourself, look, after putting 10,000 for 30 years, I only get so much. It looks little, but then you forget that your life was insured, and that had you died, the insurance company would have had to fork out a lot more money. The challenge then becomes that because of mixing these two, I am not able to calculate the actual return on investment that the insurance company is giving you. Now, if you had a pure life cover and a pure investment product from a whatever, I can then now say this life cover, I can compare it with the life cover from one insurance to the other. And this this investment aspect, I can compare it with investing in the stock market or investing in a money market fund, and I can work out the kind of return that investment generates.
Okay, makes sense. Thank you so much, Steve Sniper from Kitale, checking us up. Now, hey, guess what? How much time we have? We have like 3 more minutes to go. And I haven't even asked as many questions that I thought I would ask, you know. There was another question here, and I think we have answered it because someone was asking what's the best way to secure peaceful retirement. I've also seen another one. I'm just checking it out. Low-lying fruits. I think you've given opportunities that we can look at. I'm trying not to repeat more. Somebody else was still asking about insurance policies. Quite a number. What's your advice? And I think you've just given that out. Thank you so much for these questions that you guys are asking. I mean, they're very pertinent. So I hope, Mushiri, you have had the genuine answer to that. So let me just go back to our quick fire, since I had thought we would have had a lot of more time. You're a leader, Faz. You're at the helm of, you have led the brokerage firm still last year. You're still CEO as well. And a lot of leaders as well will be watching and may want to just pick a few nuggets here and there on, leaders sharpen each other. That's what they say. So I had 10 questions for you, but I can only ask maybe 2. And one of the key questions is this: what would you attribute your success so far to?
I think my success so far has been to do with having the courage to show up. And to work honestly with people. Yes.
Wow. Show up and work honestly.
and work hard.
Okay.
Yes.
How do you measure your own performance at work? And I think I would also want to combine your own performance and even your team's performance.
So I measure my performance. The critical thing about performance is, first of all, you need to have a strategy. And that strategy then translates into a budget. And that budget then, and then you create that linkage between the strategy, the budget, and the individual performance of the individual performance. Once you create that relationship, then you will find that you will deliver on your targets.
Okay. What's your advice to someone who wants to better themselves or be a better person of themselves?
I think my advice, and I think this is one I take, to be a better person, you need to create better people. Help people be better.
Okay.
Yes.
Wow, that will eventually trickle down to you.
Exactly.
I love that. So a lot of young people could be watching and saying, wow, this guy, man, I would want to be like him or something like that, you know. So what's your advice to younger generations behind you? What is this one piece of advice that you will give them?
Well, yeah, I think the advice I would say, have the courage to make the commitment.
Okay.
Even when you are completely uncertain.
Yeah.
Of what you are going to do.
Okay.
I mean, I've gone to positions where I've sat on the chair and I thought to myself, what the hell were you thinking about?
Yeah.
But somewhere along the way, you found your way and whatever. So that courage to just make that first step is very important.
Yeah.
The next thing is to build relationships. And the only way to build relationships is if you are honest and trustworthy.
Yeah.
So if people can depend on you and they can put their faith in you,
yeah,
that will mean that you will have very good relationships. So along the way, along your career,
yeah,
always look to build relationships with the people you encounter.
Okay.
At every stage in your life. Because you never know, one day you'll be somewhere and you'll need something and you'll pick up the phone and the guy will say, I got you.
You're right.
Yeah.
You're right. By the way, that's true. You know, I've just read something here and I felt, I know I was done with comments, it's 9, but just listen to this. Philip was quite quick in asking about, you know, where to invest your retirement cash and all. He says that he had a policy for 15 years, but after 5 years, I didn't have an income and the company had issues in ending my policy and returning my funds. I don't know, he just threw in that comment. That's quite sad, right?
Yes, so you really need to look at the fine print of these policies.
Okay.
And that's why I always say the 3 things you need to look for.
Yeah.
Is liquidity.
Yeah.
How quickly can I liquidate these investments?
Yeah.
And liquidity sometimes can be a good or a bad thing.
Yeah.
Because sometimes you don't commit the long term.
Yeah.
Because if you're able to access that money,
yeah,
then it breaks your savings cycle.
Yeah.
So it could work against you.
Very
so
true.
Maybe this money was for retirement,
yeah,
but all of a sudden you have a crisis, you pull it out, and then you don't end up fulfilling your objective of investment, of retirement.
Yeah.
But also then you need to ask yourself, what happened? So the policy probably had this structured for 15 years. If you take it out in 5 years, normally, even if you get your money, it's extremely punitive. You will find that what you'll get is very, very small.
Yeah.
So if you've committed for 15 years, I think be prepared to go the hog on the 15 years. What you really need to do is, in terms of your financial planning, you need to plan for emergencies and have some emergency money that you can quickly access in the event maybe you are not able to whatever. So distinguish between your short-term emergency money and your long-term investment.
Okay.
So what the gentleman was trying to do there is to use his long-term money to resolve his immediate problem.
Yeah.
And that's not always the way to do. You need to separate and create a short-term nest egg that will take event of short-term pitfalls and keep your long-term money to go the distance.
Okay, there you have it, Philip Mwangi. Please, room for one more, because there were many, you know, they normally, why do normally guys send after? So Steve Sniper is called that way, eh?
Yes.
Has a very genuine question, and I like his genuinity here. How do you calculate the treasury bonds earning? For example, does 12% interest rate mean 1% a month? Sorry if my question sounds stupid. It's not stupid, it's fine. So does 12% interest rate mean like 1% a month?
More or less. I don't think we need to to complicate it.
Yeah.
Obviously, it's not exactly 1%.
Yeah.
There's a calculation that goes it, but it is more or less 1% per month. Yes.
Okay.
Yes.
Mushire Kehi, your good insights, nice show. I'm well advised. Asante sana. There you have it.
Yes.
Guys know that when it's time, it's time. Now, I had so many questions for Paul. Unfortunately, I only did half. It's okay. I think we'll have to have you again, Paul. So thank you so much for your time. Yeah.
Always a pleasure.
Yeah.
Yes.
Guys, it's 9:03. Sorry, we always want to keep time for you, but I wanted to end on this note. I mean, Paul has given a lot of advice. I hope you took notes. But I have a quote for you, that you may never know what results come from your actions. But if you take no action, there will be no results. So the best thing, as Paul said here, just try. try something out. So when we come here and give you all these opportunities we're talking about, it's good to know, but it's a different thing to act on them. So, with the latest technologies that we're seeing, even investing in the stocks and all these things using your Bonga points, by the way, what do you do with them? I mean, come on, try something out and see whether